April 21st, 2025. I ended up with a small loss on the day. And, well, not big, but smaller than small, I guess I'll say. I, the thing about high probability trading is, you can win I think I went 4 for 6 on my trades today. And the two losses are obviously going to be larger than your wins. So that's the thing, the trade off of trading with a higher probability is your risk reward isn't going to be that good. And if you have really good risk reward, your probability isn't going to be that good. So you have to find what's comfortable for you and figure out the way you'd like to trade. Are you okay with winning, 40% of the time? Because a lot of people will take swing trades and then be surprised when they lose. And I used to do it too. It's really weird, but you'll take like a 40% trade and then you'll be kind of surprised that it loses a lot of the time because it's a 40% trade. So either way, you just have to figure out how to structure a profitable trader's equation. So with that being said, 1, 2, 3 probably needs a second leg. We have a big gap down, and gaps often get second legs. You can think of a big gap as a giant bear bar, so you have to expect a second leg down. 4, a doji bar, not really that great, probably sellers above. 5, 6, and 7, 3 straight bear bars with decent closes. I did sell the close of 7, and I got out with 1R. So just got a measured move down into this area. So I did sell the close of 7. I thought that was a decent trade. And we obviously got another leg down. 8, we have 4 straight bear bars. So if you traded the 4-bar micro channel, you also got 1R and you did a good job. The thing about this whole start is what did we not do until bar 9? Trade above another bar. So we have an 8-bar micro channel in the open. So the very, very, very high probability there's going to be sellers above bar 8. Tight trading range, 11, 12, 13, and a bull bar on 14. 14 is a classic beginner Al Brooks swing trade where you think, 3 legs down, we're going to go higher. No, we're not. Look at the 15-minute chart. If you were buying bar 18, you were buying against this. Do you want to buy against this? No, probably not. So really a pretty bad buy on 14. Odds are, maybe even if it gets one more small leg up, it's going to be some sideways to up leg, and it's not really going to be that good. And the traders who were really quick bought, and then they bought more on the close of 15, and they used 16 to get out at break even. So if you're taking that kind of trade and you can do that, then fine. But odds are, if you took that trade, you got stopped out. 15 and 16 sell the close. Obviously, we have open gaps, possible bear trend. Just this gap got closed, but it's a body gap still. So just sell the close and expect that we're going lower. I sold the close of 17 as well, 15 through 17. Yes, it's a really late leg, but we haven't been to the moving average yet today. Odds are we're going to go lower. So I sold the close of 17, got follow through, and got my 1R. I did not take this trade. I thought, no micro gap, and we were getting relatively late. Obviously, whenever you get a bear trend from the open, like from bar 1, it'll usually start to stall and go sideways around bar 18. Or, occasionally, it's usually more when the market is sideways on the open and then starts to sell off after 5 to 7 bars that it'll go sideways around bar 30. But in this situation, we started to go sideways around bar 30. I did not take 29. You can see 29 had 2 open micro gaps. And it was the first 3-bar micro channel of the day that had 2 open micro gaps, which I think is suspicious because most, this one didn't have 2, this didn't have 2, this didn't have 2. So why are we all of a sudden getting a 3-bar micro channel with 2 micro gaps? That's indicating that the market is getting stronger. It's either getting stronger or it's a very climactic move. So I did not take anything in here. I waited for 33. I bought the close of 33. I scaled in twice, 34 and 35. I bought more, 25 and 50% pullback. And I got a leg 2 measured move up. So I bought, I scaled in, and I got a symmetrical second leg into this area, and then I exited. And then I made a mistake and I took 39. It's obviously 3 legs up, 1, pullback 2, pullback 3. So I took 39 and scaled in. And, by 42, I ended up getting out around here. And I was back to a small loss on the day. So the problem is, like I said, is that, when you're selling the close of 7, none of your scalings get hit. So your position size is relatively small versus here, all your scalings get hit and you lose on them all. So the very high probability, the trade-off is, your losses are going to be pretty large. And so I ended up at a small loss at that point on the day. I thought, 39 first test of the moving average and 3 legs up. So really not really all that great to be buying up there. Did have a micro gap here, which was good for the bulls, but I probably could do better than that. 42 is, I gave that a 90+% chance of getting a second leg. We had 3 legs up for the bulls, and then basically perfect 3-bar micro channel down. So pretty easy to sell the close of 42, scale in on the pullback, and then you get your second leg down. I also sold the close of 45. I scaled in and got my symmetrical second leg somewhere in, I don't remember where in here, but it was somewhere in here that I got out. 57, 58, first leg, it's leg one, right? And it's consecutive bull bars. So I think odds are we're probably going to start to go more sideways here. This is a spike, a pullback 46, and then 1, pullback 2, pullback 3 legs down. So we had a fresh breakout, bar 42 through 45, or really 40 through 45 if you want to look at it that way. Spike, pullback, channel, and we should turn into a trading range here. 57 through 61 is 5 straight bull bars. Odds are that we're going to get the second leg up from that. The sell-off down to 64 maybe needs a second leg, but it's probably just a deep pullback from the rally 57 to 61. And I made a mistake. I did take 64, and I ended up getting stopped out. Really wasn't that good. My system tends to struggle at the end of trend days. So at the end of a bull trend day, buying is usually a bad idea, and at the end of a bear trend day, selling is usually a bad idea. And I ended up doing it anyways today. So really not. That's definitely a mistake on my part. And then obviously we rallied back into this area, which is where the trading range started. So some traders might buy the close of 67, 68, expecting at least another leg up. You can see we got leg 1, leg 2, and then some. So I'm also studying a little bit on when you do get immediate follow through, what are the odds of the whole leg with immediate follow through getting another leg up? I think that's important to note. But yeah, I ended up with a small loss on the day. Not really my greatest trade on 64. I'm a little disappointed in myself for that one, trading against a 5-bar micro channel. It's really not a good idea because the bulls pretty clearly needed a second leg. So probably better to just get out there. I considered just getting out after 67, but I'm just trying to stick to what my system is telling me to do. On the 15-minute chart, so, yeah, we're rallying, but it's going to be a minor reversal. This is going to get another piece down. So tomorrow, if we go sideways, I would look for a sell-off towards the end of the day. Even if we go sideways for the first bunch of bars, odds are the bears are still going to be in control because this is so much selling. I mean, I don't know the last time I saw a 10-bar micro channel on the 15-minute chart. I'm sure there was one somewhat recently, and I also guarantee you it got a second piece. So I do think that we go lower. The daily chart. So as I mentioned last week, 3-bar micro channel should get a second leg. It looks like we're getting it. We're probably going to head back to 5,000. The weekly chart, it's 3 leg down, 1, pullback, 2, pullback, and we're getting a 3rd leg down. I don't know where the 3rd leg down stops. Maybe 5,000, maybe a little bit lower. I'm not really sure. Maybe 47.50. I don't know. But we'll see where leg 3 takes us. And it's pretty important where it takes us because of this, right? The monthly chart. If this is, we've only had in the past 5 years one other 3-bar micro channel from the bears. And it's this one. Obviously, it did not get a second leg, and we got just a large rally. You could argue that we need to take a test there, but I don't really know. I think that if this closes strong, that's really problematic for the bulls. So towards the end of the month, look for traders to fight over the close of this bar, because if this is a strong close for the bears, that could be really problematic for the bulls, and we could start to, I don't think we go to 4,000, but who knows, right? That would be a 35% correction, which isn't unheard of. So we'll see where this ends up going to. But all right, that's going to be it for this video.